Hello, I'm Mitch Kuhn with NHA. I'm going to be talking to you today about life settlements and why would I want to sell my life insurance policy. Well, first of all, selling a policy brings a much higher price than the cash value that an insurance company will offer you. So if you own some type of a permanent policy that has cash value and you decide you no longer want this policy or you need money now, you can go to the insurance company and they will give you what's called the cash surrender value. Now, that value depends upon a lot of different factors, how the policy is performed, premiums paid, all of those things. So, whenever you sell a policy, you're going to get more than the cash surrender value that the insurance company is going to offer you. It's kind of like if you were to take your car to the dealership to sell it, they're going to give you a lot less than if you sell it to an independent third party. So, selling a policy is always better than surrendering the policy to the insurance company for the cash value. So, what are some reasons why somebody would want to surrender their policy or sell their policy in the first place? Well, many times it's because there's a need for money today, whether it's medical expenses, living expenses, there's a cash flow issue and money is needed now. Oftentimes, this is to pay for long term care expenses. Now, when it comes to long term care, when people get older and need help, or if they're during their working years and need help taking care of themselves, the only thing that the government pays for through Medicaid is nursing homes. Everything else is private pay. So, care in your own home, assisted living, that's all private pay out of your own pocket until you're impoverished. So, if you want to stay here in your own home, or if you want to go to assisted living, which are far better, more comfortable options than a nursing home, you need to have your own funds to pay for that. And a life insurance policy can provide those assets, that cash needed. Many times when a policy is sold, another life insurance or other type of insurance policy is initiated or started. So you could sell a larger life insurance policy to get into a more affordable or cost-effective life policy of a different type. It could be to fund a long-term care policy or an annuity. So 1 in 3 life settlements create some type of a new insurance contract. Oftentimes the premiums have become unaffordable and people are saying I can't afford this anymore. I'm just going to lapse the premium payments. When they do that, they don't realize there's the option to get a lot more than the cash surrender value. Or in the case of term insurance where there is no cash surrender value, you could get a lot of money for that policy where you had planned on getting nothing, just letting the coverage lapse. Term insurance can actually be some of the most valuable policies to sell because the premiums can be so low. And oftentimes it's due to a change in estate planning or investment objectives. Whether you've had a buy-sell agreement that's no longer needed through partners in a business, if a spouse has passed away, if the net worth of an individual has changed significantly, and that life insurance was bought for the purpose of helping to pay off those estate taxes. For whatever reason, in that estate planning process, the insurance is no longer needed. You can take it to a third party, sell this, and get considerably more than the cash value. So here's a couple of examples of why people sell their life policies. Joan has developed dementia. She has a whole life policy, and the premiums are difficult for her to afford. She's on a limited income. Her children can no longer provide the care she needs, so she must move to an assisted living facility. She spent most of her savings, and she needs more money to pay for her care. Assisted living can be a really great environment. It's a very different living situation than a nursing home. It feels more like community apartment living. It can be very nice and very upscale. So folks can really enjoy that if they have the private pay dollars to afford it. Mike has a convertible term policy, but the conversion cost is far more than he can afford. So Mike bought this policy to help make sure he could cover all of his debt and all of his expenses and leave some money for his kids if they were to pass away, if he was to pass away when they were younger. Well, now they're grown, they're out of the house, they're all married and have their own kids and have jobs. They're fine. So Mike no longer has the need for this large term policy. So he's got the option to convert it, but it's a big premium and he can't afford that large premium. So he's just going to let it lapse. And because there's no cash surrender value, he's just going to get nothing. Well, he can sell his policy for a significant sum rather than lapsing the policy and getting nothing. And finally, Susan wants to stay in her own home, but she can't afford home health care. She had a husband, her husband passed away, and so now she's living on a her modest teacher's retirement income, and she's having a tough time paying these premiums. Kids live far away. There's just not options for her to stay in her own home. But if she sells her universal life policy and gets a significant sum of money, she can stay at her home for another year or two and, and see what happens after that. So I hope these examples help you to see how valuable selling a life policy can be and how it can really provide for your needs in a very efficient and cost-effective way. So thank you for listening. Feel free to watch our other videos on our channel. Thank you.